Welcome to The Explainer. Today, we're looking at what is honestly one of the most fascinating and, frankly, perplexing puzzles in the entire crypto space right now. We're going to examine the very curious case of Quant, and specifically its native token, QNT. Now, if you're a focused learner who really values hard data and structured facts over, just blind internet hype, you are absolutely in the right place. Today, we're dissecting what I like to call the Quant paradox. See, we have this glaring, almost unbelievable disconnect between incredible, high-level institutional adoption on the one hand and a remarkably sluggish market reality on the other.
Okay, let's dive into this. How is it even possible that a cryptocurrency working directly with some of the absolute biggest financial institutions and central banks on the planet is currently struggling so much when it comes to its token price? It's a question that literally has top analysts scratching their heads. Normally, you'd expect that when a blockchain project lands a massive, real-world partnership, boom, the token price just shoots to the moon. But Quant? Well, Quant is currently defying that basic crypto logic entirely.
What we're really looking at today is a massive, fundamental tug of war. On one side, we have these monumental, institutional milestones. We're talking real, tangible integrations with the legacy financial system, the big leagues. But on the other side, we're dealing with bearish chart patterns, technical breakdowns, and just a generally stagnant price action. It is the classic battle, right? The long-term fundamental believers squaring off against the harsh short-term reality of traders.
Section 1. Connecting Global Finance. The promise of Overledger.
To truly understand the fundamental side of this tug of war, we first need to look at what Quant is actually building. It's best described with this brilliant analogy. Think of it as a universal power adapter for blockchains. In the crypto world, we're super used to these bridges that connect different networks. But here's the catch. Bridges require locking up assets in smart contracts, which introduces massive security risks. Overledger is totally different. It acts as a highly secure API-based overlay. It allows legacy bank networks, private enterprise blockchains, and public networks like Bitcoin and Ethereum to all seamlessly communicate and settle transactions. And the best part? They could do all of this without having to rewrite decades of existing banking infrastructure. And because of that highly secure, compliance-friendly design, Quant is definitely not out there chasing retail hype or the latest meme coin trends. No, they are out hunting whales. We are talking about Swift, literally the backbone of international banking. We're talking about UK finance, which includes massive legacy players like Barclays and HSBC. They are actively working with the European Central Bank, the Bank of Japan, and huge tech giants like Oracle. This is a level of fundamental institutional backing that almost no other crypto project on Earth has managed to secure. Let's move to and see how this builds into concrete operational adoption over the next couple of years, because this timeline is absolutely crucial. On April 4th, 2026, Swift completed testing to integrate Overledger as a primary interoperability layer for cross-border settlements, specifically using the ISO 2022 standard. Then, by mid-2026, the Great British Tokenized Deposit project is set to conclude, officially shifting from pilot testing into live, high-value operations. And looking just a bit further ahead to 2027, Quant is perfectly positioned as a pioneer partner for the European Central Bank's digital euro pilot. These aren't just theoretical white papers, guys. This is live, world-running financial infrastructure.
Section 2. Tokenomics and Utility. Engineering Scarcity.
So you might be wondering, why does a bank using Overledger actually matter to the QNT token price? Well, it all starts with this one specific number, 14.6 million. That is the maximum, absolutely fixed supply of QNT tokens that will ever exist, period. In the world of crypto, where some projects literally print billions or even trillions of tokens, 14.6 million is incredibly tiny. That extreme scarcity, that is the absolute bedrock of Quant's entire value proposition. Let me break down exactly how that tiny supply is put to work in what's known as the QNT supply sink. Step 1, an enterprise client decides they want to use Overledger, right? So they pay an annual licensing fee. Now, they usually just pay this in standard fiat currency like dollars or euros. Step 2, the Quant treasury automatically takes that fiat money and converts it by buying QNT tokens straight off the open market. And then, step 3, those newly purchased QNT tokens are legally locked up for 12 months, for the entire duration of that client's license. So think about what that means. Every single time a new enterprise partner comes on board, tokens are quite literally sucked out of the circulating supply and locked away. Section 3, the bearish market reality, stuck in neutral. Now, if you just looked at the tech in those massive partnerships, you'd probably assume the price chart is just a straight vertical line up. But that's exactly where we hit a massive wall, called the beta effect. Currently, Bitcoin commands a staggering 60.55% market dominance, and because of this, altcoins like QNT are suffering from extremely high beta. This basically means QNT's incredible individual fundamentals are being completely overpowered by the macro movements of Bitcoin. If Bitcoin sneezes, Quant catches a cold. Right now, QNT is basically just a passenger in a car that's being erratically driven by Bitcoin, totally unable to chart its own course.
And when we actually pull up the specific technical indicators for QNT, the data really confirms this underlying weakness. We've seen a recent breakdown below a major psychological and structural support level of $70. This breakdown is tough because it invalidates prior accumulation phases and flips that $70 mark into heavy resistance. Furthermore, the MACD indicator is deeply negative, sitting at negative 1.39, which definitely confirms a bearish trend. Meanwhile, the Relative Strength Index, or RSI, is sitting right around 42.38. It's showing clear distribution and a real lack of near-term buying momentum, even though, to be fair, it hasn't quite reached oversold territory just yet.
So the crucial point is summarized perfectly by this single data point right here. The ADX, that's the average directional index, which essentially measures the overall strength of a market trend, is currently sitting at a super low 10.08. Just to put that into perspective, anything below 20 usually indicates a really weak or practically non-existent trend. An ADX of 10.08 basically means the market for Quant has absolutely no pulse right now. It is entirely directionless, just drifting sideways, desperately waiting for a major catalyst to push it one way or the other.
Section 4, Future Catalysts and Predictions, Resolving the Paradox. So we have our incredibly solid fundamentals on one side and our bleak directionless chart on the other. How does this all end? Well, we need to look very closely at the imminent 2026 roadmap milestones that could finally inject pure, undeniable utility demand right into the token. First up, there is the highly anticipated Overledger Fusion Network upgrade. Second, following the recent mainnet launch of QuantNet, we're expecting staking activation to officially go live in 2026. This is huge, folks, because it will introduce yield generation, directly incentivizing holders to lock up even more of that tiny 14.6 million supply. And third, as we touched on earlier, the massive transition of the UK tokenized deposit project into actual live fee-generating production. These are the concrete sparks that could finally ignite the engine.
Now, we also have to keep the broader competitive landscape in mind here. Let's compare Quant with its biggest, most obvious rival, Chainlink. While Chainlink's CCIP protocol is undeniably a massive player in the space, its primary focus has traditionally been heavily on decentralized finance, or DeFi, and moving on-chain data around. Quant, conversely, has tailor-made its entire system from the ground up for regulated legacy institutions and extremely strict compliance. This unique, hyper-compliant positioning is essentially Quant's protective moat, allowing it to secure a very distinct, highly lucrative market share entirely away from your typical crypto-native applications. And this brilliantly illustrates the sheer division in 2026 price predictions right now. Just look at this. You have MEXC offering a pretty bearish downside target of around $41.47 if this current technical breakdown continues. But on the exact flip side, their own bullish target jumps all the way to $135.27. And then you have analysts from places like Queen Delia and VentureBurn shooting all the way up to an extremely bullish $280. That massive, gaping divide in the forecast brilliantly highlights the sheer, overwhelming uncertainty currently gripping the market.
We've explored the massive enterprise adoption that is actively locking up a super scarce token, and we've analyzed the heavy, directionless technical charts that are currently holding the price down. It is a true, classic standoff between raw utility and prevailing market sentiment. So as we wrap up this explainer today, I want to leave you with this one final, powerful question to really think about. As these massive banking projects finally move from their testing phases into live, everyday, real-world production, will Quant's fundamentals finally generate enough sheer force to break completely free from the broader crypto market's gravity?